Hey everybody, welcome. Oh my voice. Welcome to today's episode of Stocks for Breakfast. It's Wednesday, April 22nd, 2020. Got a lot to cover today. We're going to talk about how to take advantage of oil, some different strategies to take advantage of the historic collapse that we just had. Obviously, this is Stocks for Breakfast. How do you take advantage of oil? Slightly off topic, but there's different ways to take advantage of it. We had a good question in the coaching program yesterday from Teddy about, can you take advantage of this situation through airlines, and can you do it with options? I have a pretty detailed answer for that. We kind of went back and forth, and he pulled the trigger on the trade that he wanted to put. If you find these videos helpful, absolutely click down and subscribe. You'll love getting the updates. We have many different types of videos, but Stocks for Breakfast every day, Monday through Friday, usually 2 hours before the market opens. Also, if you have any stocks you'd like to see reviewed, definitely click down in the comments and leave that. Also, if you just have any related trading questions that you're unable to conquer on your own, but that's the whole point of community, right? One thing I want to call out today is I'm getting a lot of friends and family asking about what they should be getting involved with now. I think that the 2008 financial crisis is still fresh enough in everyone's mind. My head is kind of shining. It's still fresh enough in everybody's mind where everybody's thinking back to, my gosh, all these stocks were so cheap back then. I didn't take advantage of it. What can I do now? How do I take advantage of this situation? Because I don't want to look 5, 7, 10 years from now and say, oh, I could have bought XYZ stock at X price. And now it's all the way up here, which is obviously what a lot of people are mentioning about oil right now, even though most people have probably never invested in oil in their life. But it's the right thought process, quite honestly. But I want to make a distinction that's super important. The difference between trading and investing. They are completely different businesses. And the way I describe it, and even specifically more day trading versus swing trading, because really that's a better analysis, but I want to talk about day trading versus investing. If we just use day trading versus swing trading, a lot of people have their full-time job and they swing trade as a side hustle, as a way to supplement their retirement income, as a way to supplement what they make on a monthly basis, as a way to make themselves feel good that they went into the market and pulled money out of the market. They made the stock market make the money. The difference between day trading and swing trading is like professional baseball and weekend softball. They look exactly the same. Like, it's exactly the same game. They are universes apart. If you've ever tried to hit a 90-mile-an-hour fastball, and I'm not even talking about the 100 that a lot of these guys throw now, which was unheard of when I was playing baseball in the 80s. If you've ever tried to hit a 90-mile-an-hour fastball, versus you're playing on the weekend and it's basically a soft toss and it takes like 4 seconds for it to get there, and you could probably have a cup of coffee by the time it gets there. And then you go back to baseball, you just got a 95-mile-an-hour pitch, 90 mile, and now the guy throws a curveball and it buckles your knees and you fall down. That's the difference between day trading and swing trading. One is a lot easier to think about because stuff unfolds slower. The other one, you absolutely need to make fast decisions. Now, actually, I'm bringing this up for 2 reasons. Number one is which stocks to day trade versus swing trade, and then ultimately invest in the thought process of investing. And the other one is if you choose to day trade, which I've been day trading a long time, 20 years now. I love it. I'm so happy that I have took the plunge when I did earlier in my life when I didn't have a lot of responsibility. And you learn at an accelerated rate because there's so many opportunities for you to say, this works, that didn't work, this works, and develop a strategy that makes sense for you. However, it's imperative, if you're going to choose to day trade, that you have an exact strategy that you go to the market with every day. Obviously, my strategy is order flow. It was developed over the years. So order flow is the bigger picture of whether or not I want to be a buyer or a seller on a particular day, a particular week. And then within order flow, I have what I call saturation plays, which is how I track momentum on a daily short-term basis to determine when I get in and out of trades and ultimately how I manage those positions. If you go into the day yourself as a day trader and your strategy and your tactics are wishy-washy, if they are, I don't know why I did that, if they're not concrete, where every single day you are looking at the same thing, you're going to get your head chopped off. It's that clear. There's not even a question about that. The market will make you pay for not for not being definitive. But the opposite of that is if you go into every day saying, I know exactly what I'm looking for, and actually somebody in the coaching program yesterday gave me the greatest compliment ever. He said, I don't see anything. That's what I want to hear when the market's choppy, if there happens to not be anything going on, because that means he's looking for something specific. So I'm giving you general advice for trading versus swing trade, day trading versus swing trading, as far as get your act together, or you could use my strategy, fine with that, but get your act together to where you go into the market every day saying, it doesn't matter what happens because I know what I'm looking for. That's day trading. The opportunities are endless and profitable. I'm trying to think of the right word to use that. If you're prepared. If you're not prepared, like somebody I spoke to yesterday afternoon, who had a stock move down to a position where he was supposed to get stopped out because that was the level that he said he was going to get out, and he didn't. Not only did he not, but he added to a losing position. That is the ultimate sin. The market is bigger than everybody. It doesn't matter if you have billions of dollars, just ask long-term capital management. And you can Google that if you want a fascinating story. Awesome book, by the way, When Smart Money Failed. Or you can say, I'm willing to risk $300 on this next trade. If I get stopped out, I'm going to execute the trade exactly where I said, and then I'm going to look for another entry price if it triggers again, if the idea is still valid. That's the right way to trade. I can't stress enough, more smart people could be successful traders if they would get their ego out of the way, stop saying, I'm right, the market's wrong, I know the stock, it's going to come back, and just be disciplined. Why? Here's the big thing. Why are some people more disciplined than others? There's only one reason. One reason and one reason only. And when you get this and cement it, put it on a Post-it pad on your monitor. When you realize the bigger losses that you take that were 100% your choice, to exit when you were supposed to, or to not even be in the trade in the first place because it didn't match your strategy, when you avoid and eliminate those garbage trades because it's trading sideways or there's no edge, or you take a loss bigger than you expected to, when you eliminate those two things, you immediately become a better trader, and that puts you on the path to stop losing money. And then the next step together is understanding how to manage the winning trades. And trust me when I tell you, that is by far the most exciting problem to have. I'm not making enough on my good trades. That's where trading gets really exciting. So anyway, I kind of went off on a path because I had a few coaching calls yesterday in addition to being in the chat room with everybody. And sometimes I forget stuff is a core part of what I do. But when I hear it from, I don't forget to do it, but when I hear it from newer traders who are struggling with what I consider the basics, for me, it's actually fun to revisit what I went through, but it's also just as fun for me to walk them through stuff that I conquered. And I'm going to say it, I worked my tail off to get to the point that I'm at now, stuff that I conquered because I made those mistakes. You finally get to the point where you admit what doesn't work, you make a big list of what doesn't work, and you stay away from it. And blowing your stop losses, the number one thing at the top of the list. Number two is not having a strategy and not staying away from, I'm using a lot of nuts, not having a strategy, which basically makes your trading random as heck. Now, trading is random in the first place because we're trading probabilities, but if you have a strategy, at least the randomness of the outcome is in your control because you're not putting money in harm's way unless your edge is present. That's the big deal. So anyway, we're going to get into Netflix very quickly. We're going to talk about oil and how to possibly trade oil. And then I have a bunch of stocks that I'm going to rattle off that we could potentially look at today. I think one of the biggest things today that's pretty interesting is a lot of people are interpreting how bad yesterday was, and they're ready to, one negative day after going up for 3 weeks, and everybody's like, what's going on? Why is this so? It's a part of marketing. It's a part of the trade. If you read Reminiscence as a Stock Operator or any of the Market Wizards books or any of that kind of stuff, the market's going to pull back. And what's funny is that was a lot of people were like put to sleep prior to the pandemic that's going on right now, because the market just kept going up every single day and there was nothing to watch. That's not reality. Sure, that was what was going on because of all the money that was getting pumped into the market through stimulus plans and whatnot. But a natural function of the market is it goes up and it goes back and it goes up and it goes back, and that has to do with corporate profits. So the fact that we went down yesterday, I was actually salivating because I finally had opportunities to look at strong stocks with weak closes for a couple of days, looking for spots to buy, and then retest, if not take out the previous highs. Those are the perfect scenarios because you have an established order flow in one direction. The order flow was released for a couple of days, and especially looking for trades where stocks closed negative 2 days in a row, larger red candles, and closed especially on the low yesterday, which we had a bunch of those. And the game plan, the ultimate game plan would be two trades. Looking to trade yesterday's low as a place to bid for a new stock for it to rally back up. Or if you remember the trade that we discussed in UNH yesterday, where it was down 2 days in a row already after reaching that big resistance level, after having a monster move to the upside, we actually looked for it to open lower, push lower, and then I gave you the exact number to look for a spot to bid. It didn't get all the way down to that number, but it was nice to see a lot of feedback, especially in emails, about people who never thought about the structure of strong stocks pulling back, looking for, hoping, wanting them to close on the lows, and then looking for another push lower the next day as the ultimate spot to look for a new entry. So it was kind of cool to get those emails yesterday. Thank you, by the way. It's kind of fun when a light bulb goes off and you say, I never saw it that way. But that's the whole point of us doing these videos together, right? All right, so we're going to go into the screen. We're going to take a look at a couple of stories. This kind of emphasizes what I was talking about in the market yesterday. Everything pretty much pulled back. This is a heat map of the S&P 500. But some good opportunities. We had quite a few stocks, Microsoft specifically closing on the lows yesterday. We'll take a look at that one. I actually did get long Microsoft intraday yesterday. Stock, the trade failed. Big deal, not a big deal. It happens, right? So one of the stories here obviously is Netflix yesterday. And I keep harping on this because we're in earnings season, and not specifically about Netflix, but it's how to interpret earnings. Obviously, Netflix exploded subscriber growth during what's going on in the world right now, but they were very, very clear. Subscriber growth exploded, but the word that they used was temporary because everybody is going to be getting back to work eventually, and you're paying for the future earnings if you're an investor in Netflix right now, or anything that's coming out with good earnings. You're paying for the past earnings. You owe the previous earnings up till that moment if you own the stock. But if you buy the stock after earnings, you're paying for the future earnings. And Netflix was very clear yesterday. The earnings and the subscriber growth was temporary because of what's going on, and telling investors not to expect it next quarter and the quarter going forward because of the enormity of the explosion in subscriber growth. So very interesting that we got such a good exaggerated example, not for the reason we got the example, but absolutely because good example of what to know about earnings versus guidance. So Netflix, because it said it was temporary, despite the fact they had massive subscriber growth, the stock is not really exploding. As a matter of fact, I think the last time I looked, it was actually trading lower. So next we're going to get into the obvious story here, the oil story. Oil, front month contracts of oil hit the lowest this century as coronavirus hammers demand. That is the reality right now. So we're actually going to get into a couple of different ways that you could possibly invest in this right now. And remember, I just used the word invest. You could choose to invest and hold for where you believe it's going to be a year from now. You could choose to be a trader where you're going to maybe trade futures contracts over a little bit different, shorter time period. You could possibly trade the airline stocks like Teddy had mentioned yesterday. He was looking to initiate a option spread with calls where he was going to buy the most recent airlines at, I believe, I forgot which one it was. We'll take a look. I think I can remember it. Where he bought whatever it was at $8 and then sold the $22 call. So he locked in a spread in that window to 2022. I personally, and I said this to Teddy yesterday, I personally don't like trades that have an expiration date on them because the stock could move exactly where you expect it to, but if it doesn't move within that time frame, you'll still lose money because of the expiration. So option market makers are smart. They're pricing the options at levels where they could make money because of the price movement, the volatility, and the time expected to get there. So it looked like Teddy initiated a good one for the price that he got, but I wanted to explain a different way to be able to invest maybe in the airlines right now, where Teddy locked in his potential downside because the option purchase can't go any lower than that. And he put in his window of when he expected it to happen. The only downside, which is not really a huge downside, is you're limiting your profits up to that call that you sold up above. If you want to be a little bit longer term investor, OILETH or USOETH. So I actually have the weekly charts here so you can see the historical price levels of where they've gone. So I remember this back here in 2008, 2009. That was a pretty strong market, as was the collapse. So you can make a choice whether you like USO or OIL. USO seems to be the one that's a little bit more tradable as far as potential profits of where it can go. But you can see here from 2016, it was pretty much in a trading range. But that's obviously changing right now. The other way you could do it is if you trade oil. So we'll specifically get into crude oil or light sweet crude oil futures. Let's go with the basic crude oil contracts. You can see that there are a bunch of contracts. If you've never traded commodities before, commodity contracts expire. These were originally created for the person who actually makes the commodity or digs up the commodity in this case, and they expire each month. There was a way of them hedging their profits in exchange for demand, which is actually what's going on right now, right? So if you believe that crude oil will be higher at some point in the future, you could trade crude oil, light sweet crude oil. There's a bunch of different crude oil contracts. I don't want to get into that because it's a whole other program, basically. But this is actually my background. I started trading this. If it was me, I'd be looking towards probably either December, January, believing that this stuff is going to kind of get back to normal. Although, if you watched the news last night, the CDC actually came out and said that we might get a second wave in the fall, which, gosh, I really hope we don't. I really hope we don't. So anyway, the stock futures right now we're going to take a look at. They're rebounding higher after 2 days of steep losses. I think that this is hysterical, how they're exaggerating steep losses after the market had a historic run to the upside for 3 weeks. So I'm not saying it's irresponsible, that they definitely have to put a headline on it, but it's profit taking. I mean, all we talked about was how strong the market was. The president, love him or hate him, all he was doing was bragging about is how far this thing bounced after it sold off. I don't want to get into politics. That's not the point. The point is we exploded higher and had this massive rally in 2 days. Is our steep losses? Come on, put it in perspective. So anyway, we came into the week very clear, saying that we expected selling, we expected profit taking, and the way to pay attention to that and to determine what you were going to trade was how it traded from the open and the previous two highs. So we are actually still an inside candlestick on the weekly chart of the SPY, but we are clearly lower highs. We're not well offered yet because we might if we trade lower today, but we need to trade the previous low to make us well offered, where we'd now start to see trades on the short side or sell a little bit stronger. If you happen to be long, as we mentioned multiple times in over the weekend as well as yesterday, if you happen to be long and they were trades, the fact that we were coming into resistance and we were prepared this week for selling to come into the market, that would be an opportunity to move up your trailing stop. So something, for example, like Shopify, we discussed. Let me put this on the daily chart. We mentioned that there was exhaustion in volume, which you could see this massive spike in volume here on, this was Monday and Tuesday. And yesterday, you can see the selling came in a big way. So we actually did say multiple times, that doesn't mean you necessarily get out of your long, because you can see it actually did trade all the way up to 660. So the close here was 629. It actually went another $30, but we said trail your stop, assuming it pushes higher. This exhaustion is telling us that the buying pressure has dramatically shifted, and you can see what ended up happening. The stock got hit pretty hard yesterday, but if you listened, hopefully you trailed your profits up on that and you locked them in instead of sitting on the way back just hoping. There's no reason to hope. You have to be disciplined with your profits as strongly as you are with your stop loss, which is another big lesson there too. So I'm going to do a little bit of discussion just quickly, again, to help everybody determine, do I get involved with airline stocks at this point? There's usually a really unbelievably good trade in normal market conditions. When oil goes down, airline stocks goes up. Obviously, we're in a much different situation right now. But if you remember, when this happened over here, we said we were seeing accumulation because of the spike in volume, and we believed that the downside was much, much more limited. And you can see now in over a month, actually about 6 weeks, we have not gone further down. So we didn't guess. We used the charts. We actually read the tape and said volume increase. We're going sideways. That generally means accumulation. So far, the market, the airlines have not traded lower. Yes, there was some news with the government intervention. That's a whole different story. We're just reading the tape. LUV is actually approaching new 20-day breakdown. Keep an eye on that. I'm not shorting it at all. I'm not looking to short these guys. Delta Airlines as well. JetBlue is another one. I'm just giving you guys a list right now because of the whole story that we were just talking about, and American Airlines. So that's the list. If you want, you can pause it. Those are the major airlines that people would trade. So my point is this. If you believe we're going to get back to normal a year from now, hopefully, gosh, I hope it's so much sooner than that. These would be longer term positions where they're not day trades, they're not swing trades. It's something you believe the world will be back to normal, and it's a longer, it might even be a portfolio hold, who knows? But if it's just something you're looking for, a growth stock, which hard to believe an airline stock being a growth stock, these would be the stocks that you would consider as longer term positions. So remember, if you do with options, you have a time frame that the movement must have, and if it doesn't happen in that time frame, you will lose money because it expires before it gets there. So the upside of options is cheap, and you know your downside, and you get leverage. But if you speak to professional options traders, those are 3 of the worst reasons in the world to use options. Probability of profit is the best reason to use options. All right, so we're going to get into some stocks that had those pullbacks. Tesla is one of them. So I'm just going to rapid fire go through these. We're actually looking to either bid the previous day's low or a push down, looking for a reversal. So Tesla, AMD a little bit more exaggerated. I actually like that one because we have this gap fill here. I'm going to be keeping an eye on that one today. NVIDIA is another one that meets the criteria. I love this one as well. Despite the fact that it broke the trend line, I'm still going to be looking to bid that one tomorrow. Etsy was one that we've been watching for a breakout. It actually did break out and had a bearish U-turn. This is not a trade for today. It hasn't pulled back. It's actually still well bid if you look at it. So this is actually one that I'd be looking to get long again if it holds that 2-day low just above 60. mRNA is a stock that a lot of people are day trading right now. I don't think it's a great swing trading stock. I do think it's a really solid day trading stock. The intraday activity and the volume is just really, really good. Look at some of these movements intraday, just really solid price action. But I don't want to talk about day trading as much right now. I want to help everybody set up some trades in the bigger picture. Microsoft actually now really, again, reading between the lines, clearly has broke the trend line, right? If we keep things simple, clearly broke the trend line. And the right way to draw a trend line is don't go through price action. Actually, let me pull that back. So this is a potential change of trend. Now we need to see if it stays there. I'm actually going to show you very quickly the trade that I made in Microsoft yesterday that did not make money, just full disclosure. I was actually looking to be long because of how strong the stock was. It opened lower, and this was my entry signal. I was looking for, again, keeping it simple, my inside candlestick entry, looking for it to retest. Did not. It actually started moving in my favor, had another entry signal that didn't trigger, pulled back and stopped me out. So again, just full disclosure that not all trades work out. Next one we have is Match, MTCH. Same thing. I'd like to see this one pull back a little bit further. It's not pulled back enough. It's not quite what I call a saturation play, but did meet the criteria of closing on the lows and a strong stock. Another one, Gilead, was one that was mentioned a few days ago. Obviously, the stock is a mess. If this was in EKG, you'd be like, oh my God, this guy's in trouble. But it does meet the criteria where it took out highs, now has closed well offered 2 days in a row, closed below the open 3 days in a row, closed near the lows 2 days in a row. So I'm actually looking for the stock to push lower and look for a spot to bid. Strong stocks with a strong close. This one was on fire yesterday. Again, I'm just going to drop down to give you guys idea. Opening first half hour was a really, really solid trade yesterday. And this actual entry price right here was the trade of the morning. Again, I don't want to talk too much about day trading right now, but CVNA, actually, what's the biggest thing I'm watching here? Strong stock in a weak tape. Write that down. That should be one of the first things that you look for. LVS actually as well. But this one was a stock to short sell. We were short selling this yesterday. This was a profitable short sell on the short side. I'm still looking for follow through here now as well. Now, why is this different from the other stocks I'm looking to buy? Because this is actually bearish order flow. So this is actually well offered bearish order flow looking for a new move to the downside. The other ones were bullish order flow pullbacks looking for that to reestablish to the upside. Gold stocks are obviously getting bids right now. We have AU, GOLD, as well as WPM. Again, probably a little bit longer term trade, not necessarily a day trade, because these can be a little bit thin. Other stocks that we're looking at today, NEM. I love this pause in NEM, a little bit longer term trade, not necessarily a day trade or a swing trade, but I love the push and the pause. You hear me talk about that all the time. DG is another one, actually maintaining this pause very well after a very clean breakout. Something that's interesting here though to point out, look at all the melted candles recently, despite the fact that it's going up. This is actually a stock that would be a very difficult stock to day trade because it can't decide what it wants to do intraday, despite the fact that it's rallying. Obviously, dollar stores gaining very similar to Walmart, Costco, and those kind of opportunities right now. So this is a little bit longer term, I would call position trade, not necessarily swing trade, not something you'd be watching like a hawk because of the melted candles. But I like the fact that it's holding up. One that actually caught my attention yesterday as far as volume is concerned, you can see massive volume here in CNX. I love the momentum. Hopefully you're able to read through the signals now and see, my gosh, look at how many days in a row it's closing above the open. Some really solid buying here, right? But what I want to point out is this is very similar to what I just called out in SHOP before, where really good push, large expansion candlestick included with large volume. Next day, we had tried to push through again, couldn't with large volume again. So what does that mean in CNX? That means exhaustion in CNX, and I'd be looking for profit taking in that stock to roll over. So really good video today. We covered a ton. One of the biggest things I'd like to discuss, though, is the earnings in Netflix, increased subscriber base. Going forward, they said it was temporary, so that's why the stock is not up. The guidance going forward, you buy it today, you're getting the future earnings, right? CNX and SHOP, two good examples of exhaustion. You definitely want to go print out those charts with daily charts with volume. Gold stocks very strong, and we're looking for strong stocks to open weaker today, looking for a spot to bid, but the market's actually trading higher pre-market. We'll see if it stays there. So thank you so much for watching Stocks for Breakfast today. My name is Pete Renzulli. Awesome to have you. Really appreciate you watching the videos. Any comments you have, please leave them below, and also please subscribe. That would be awesome. Have a great day, and please be safe.